The Australian dollar fell a cent against the US dollar today, resuming the downtrend that was briefly interrupted by the Chinese rate cut on Friday. Markets seem to have cottoned on to the fact that it won't make much, if any, difference, so the exchange rate is back to where it was. It's worth noting that although the Aussie has fallen about 3% against the US dollar in the past 2 months, it's been dead flat on the trade-weighted index, and that's mainly because of a 6% appreciation in the yen-Australian exchange rate. In little more than a month, the Japanese currency has dropped a remarkable 10% against the US dollar, as first the Japanese economy slipped into a triple-dip recession, and then the Prime Minister Shinzo Abe called a snap election. And the other thing worth noting is that there are some early signs that commodities may have turned. This chart is a global commodity shares index and it's been rising pretty firmly over the past month. It's mainly to do with gold, silver, wheat and corn, all of which have been rallying pretty strongly since the start of October. Oil and iron ore, though, have kept falling. Last night and today, commodity prices fell, apart from a small rise in gold today. Oil and base metals and wheat all went backwards. On the local share market, you've heard about Medibank Private's solid debut, which was even more so in the context of the market as a whole, falling 0.5%, led by some pretty big falls by the resources stocks, BHP, Monadelphous and Santos among them, but not including gold miner Newcrest, which has shot up 23% since the start of November, would you believe? The American S&P 500 index hit a new record high last night, while the Tokyo market continues to respond to the falling exchange rate. The Nikkei has surged 20% in a month, at the same time as the yen has fallen 10%. And that's finance.